Good morning, all of you, and welcome back to this session on audit. In the last few sessions, we have had discussions around various auditing standards, and auditing standards were all about the various requirements of audits which the auditor was required to consider. And similar to any sort of standard, auditing standards have also been designed to ensure that there is consistency in terms of the audit procedures, which are applied by various auditors in respect of various audits that they will conduct. Yeah. Now we'll move further and now we'll get on to some different requirements of auditors. While we look at the different requirements of the auditors, for example, today we plan to discuss about the listed companies and the regulations which are applicable to the listed companies. In all of these cases, the requirements of the auditor in respect of the audit that we have understood through auditing standards will continue to apply. So that means all of the audit procedures that we have discussed, they will remain same. They will not change, be it any situation. Of course, auditor will have to apply different requirements considering the different situation, but as regards the requirements of the auditing standards, they will continue to remain same. Okay. So today we are going to discuss about listed entities, or we can say listed companies. You all understand about listed companies? Yeah. So what are the listed companies? So we can say there are two categories of companies. One which are closely held and which you generally see in the form of private limited company. Another set of companies is about the public companies, which may again be closely held, but these have changed their structure. And within this category of public companies comes another two category, that is about listed and unlisted. Now, listed companies are those whose shares are listed on any stock exchange. For example, shares of a company may be listed on Bombay Stock Exchange or National Stock Exchange. So these two are the stock exchanges which are majorly the one wherein companies go in for listing requirements. Okay. Now, what is the consequence of getting listed? The moment a company will get listed or will get its shares listed, or say other securities listed, other than shares also, they may list their securities, which we'll discuss. Public will also get involved. Public will also buy the shares of the company. And public will also involve in the trading of the shares of that company, because shares of that company will be traded over the stock exchange. Means one person can buy, another person can sell, and this can go on. And this is something which keeps going on. And many of you will be knowing about it, about the trading of shares of a company. The company in itself will not be doing that, but it's about the other persons or the public that would be doing this. And various persons may be investing in the shares of the company very frequently. Why? Because they can purchase the shares of the company at any point of time by getting onto the stock exchange. Now, because of this, public interest is getting involved in the company. So we can now look at a situation wherein people are investing, or we can say general public is investing in the shares of a company. And the moment that starts happening, we get into a situation wherein we see that the public interest is substantially involved in that company. And because it's the general public and they may not be knowing about various requirements, or they may not be aware of various requirements which they need to ensure. or which they need to know about the company. That's why it becomes the responsibility of the company as well as other regulators to ensure that the interest of that general public is protected. Correct? Yeah. It becomes the responsibility of the company as well as regulators, because they know that now the general public is becoming interested. They have become interested in this company by investing into the shares of this company. And same will be the case for so many stakeholders. So that is why it becomes very, very important to protect their interests. And how will this interest be protected? The way to protect this interest is to bring in certain regulations and to ensure that those regulations are duly taken care of, or those compliances or those requirements are duly taken care of by the company. And how does it help? It will help in respect of protection of the interests of various stakeholders. Okay. Now, for a listed company, we have understood that because the public is substantially interested, or the public or the general public or the interest of general public is involved. So that's why for a listed company, various compliances are required to be done. And when I say various compliances, these are over and above any other unlisted company will be required to do. So the moment a company gets listed, it will have to understand that because of getting listed, various compliances will come into the picture, various compliances. And for doing this, various bodies, or you can say various personnel, will have to take up this responsibility regarding compliances, regarding or to ensure that compliances are taken care of. Some of those bodies, or you can say some of those persons, are board of directors. Of course, board of directors is one body, or you can say one board of the organization, which will have huge responsibility. And you may be thinking, sir, this responsibility existed earlier also. Even if the company was not listed, it existed. That's true, it existed, and that will continue to exist. But now with the additional compliances, additional responsibilities, the role of this board of director will further increase. And other than board of directors, there will be various other committees which will have to be brought in, which will have to be created, and which will be assigned with different responsibilities, because only one authority, or we can say only one body, will not be able to take care of all the compliances. And even if they do this, it's also about ensuring that the interests or the independences, etc., are taken care of. Correct? Yeah. Some of those committees which will be required to be set up could be in relation to the audit committee. Audit committee will be required to be set up, number one. Then there is another committee which is called as, say, stakeholders committee. Then there could be another committee which could be about remuneration committee. Yeah. We'll discuss about all of these committees in detail today in this chapter on audit committee and corporate governance. But other than all of these things that we have discussed, one very important aspect that we need to always consider is that we are looking at the audit requirements. We are not really looking at the legal requirements. Our focus is what? Our focus is that of audit, because we are an auditor. Now, all of these things will also have to be ensured by the auditor. So let's suppose if there is an auditor who is auditing a listed company, now will these requirements apply to the auditor or not to ensure that the company is complying with all of these provisions? The answer is yes. So as an auditor, there are few things that he will have to additionally consider in case of listed companies. And for his routine procedures I'm saying, which are not so special procedures, some of those procedures that we have discussed also will require additional considerations whenever a listed company will get involved. Correct? Yeah. So now we'll move on to all of these requirements, and we'll also understand as to what all requirements an auditor will have to consider whenever he will be auditing such a company. Okay, yeah. So let's move with the requirements. So let's first of all understand this term, corporate governance. And let's try to understand this in a very simple manner. So one is the technical language around it or the technical definition. Let's forget that for the time being. Let's try to keep it very simple. First word is corporate. So corporate, we all understand. What's a corporate? Yeah, we are talking about a company. Second is governance. So what do we mean by governance? Tell me. Yeah, governance means in very simple terms to take care of something. To take care of something, correct? And when we need to take care of something, we need to have some authority as well as some responsibility. Both the things are required. Now, in the context of a company, this corporate governance is what? It's a function, it's a process which is required to be considered by the organization and on which auditor is also required to perform his audit procedures. Let's understand what are those. The word corporate relates to a large business entity or a large company. Similarly, governance means exercise of authority that will be required, direction or control. Now, what is this corporate governance? It's a system by which management of a business directs and controls activities. Management of the entity directs and controls activities in the best interest of the stakeholders. So it's a system which has been created, process which has been created through which activities of the entity are controlled in a way that those are most beneficial for the stakeholders. Okay, yeah. So let's understand about the issues which are addressed regarding corporate governance. Now, you must be seeing this term, listing obligation and disclosure requirements. Can you see this term? Listing obligations and disclosure requirements, regulations. Now, this corporate governance is a system which is required to be set up, number one, and the issues which are addressed in certain regulations regarding this corporate governance. Let's see what is this LODR or listing obligation and disclosure requirements. See, for a listed company, SEBI, you all know SEBI, Securities and Exchange Board of India. So you can say it's a regulatory authority which governs, okay, which regulates listed companies. And this authority, this regulatory authority brings in various regulations. One of that regulation which will apply to listed companies is called as listing obligation and disclosure requirements. Okay, and very popularly called as LODR or LODR regulations. And there's a huge set of these LODR regulations which the company is required to follow. Now, some of those aspects in those regulations regarding corporate governance are what we are going to discuss. Okay, in 3.1. So let's see what are those issues. First, responsibilities and key functions of the board. Its composition means what are the responsibilities, what are the functions of the board of directors. It has to be properly taken care of. What is the composition of the board of directors? Composition means how many board of directors are there, how many directors are there on the board, and what all do they are. Okay, so are they qualified in terms of any specialized area, or is it like they are some technical experts? So what's the composition? What's their compensation? Compensation means what's the payout which we are giving to them, and the disclosures, code of conduct and vigil mechanism. So we'll discuss about both of them later. You can just mark it up. Code of conduct and vigil mechanism as to what this is. Composition, meetings, powers, roles and responsibilities of audit committee. Audit committee is another committee on which we have talked about quite a lot. Now this committee plays a significant role in relation to a listed company. It will have various responsibilities, it will have various functions to be performed, without which it will be very, very difficult to ensure compliance or to ensure that the interests of the stakeholders are protected. Okay. Then it's about the management of subsidiary companies. Now, listed company may also have subsidiaries, and in case it has got subsidiaries, how are those managed? Procedures related to risk management. Risk management, you remember we discussed about risk assessment. Yeah, within this risk assessment process, another thing which becomes important, and that is called as risk management, means how will that be taken care of. So the procedures around it, those are again addressed in the context of corporate governance. Disclosures on important issues regarding related party transactions, accounting treatment. So all of these things have also been dealt under this part. Content of management discussion and analysis. Now, what is this management discussion and analysis? It's a separate statement, or you can say a separate document which forms part of annual report of the company, wherein management discusses about the financial numbers for a particular year. Management discusses about the performance of the company in respect of the reporting year, and management also gives the perspectives about what are the things which are going to follow. Means how the management plans to improve, or what are the new things which are in the pipeline, and how will they really be helping the organization to grow. So it's a detailed discussion and analysis of the existing numbers, or you can say existing financials of the company, which is covered under this statement. Okay. So the content of this is again dealt under corporate governance. Information to shareholders. So what are the informations which will be required to be given to the shareholders? This is one which will form part of this system called as corporate governance. Compliance certificate by the CEO and the CFO. At times, CFO and the CEO of the company are required to give compliance certificate, compliance in respect of various requirements. And it's a specific certificate which is required to be given by them. So this area is again dealt under this system of corporate governance. Then comes the compliance certificate from either the auditor will mean statutory auditor in this case, or the practicing company secretaries regarding compliance of conditions on corporate governance. So this is another thing which will be falling under this system. Okay. Now let us understand about the requirements in relation to these LODR regulations. As to where do they apply? These regulations shall apply to the listed company who has listed any of the following designated securities on recognized stock exchange in India. First, specified securities listed on main board or SME exchange or institutional trading platform. Non-convertible debt securities. So it's not only about equity shares, non-convertible debt securities, non-convertible redeemable preference shares, perpetual debt instrument, perpetual non-cumulative preference shares. C. Indian depository receipts. Those are listed. Securitized debt instruments, security receipts, units issued by mutual fund, any other securities which may be prescribed by the board. Okay. So if an entity will have any of these securities or any of these instruments listed on the stock exchange, then LODR regulations will become applicable to such entity. For us, we can take a very simple example. Say for example, there's a company ABC Private Limited, and this company got converted into a public company. It became ABC Limited. Or say there was another company PQR Limited. So there are two companies now. Now both of these companies got their equity shares listed on the National Stock Exchange. Now both of these companies will be called as listed companies. So for those companies, LODR regulations will have to be considered. Means those companies will have to follow LODR regulations. Okay? Yeah. And now you may be thinking, sir, what all items are covered under LODR regulations? There's so many items. In fact, if you talk about a listed company today, generally you will find that they will have a specialized and a separate dedicated team to ensure compliances with various regulations to which they become subject to. Because compliances in respect of a listed company are huge. And that's why in case they will not have a dedicated team to take care of those compliances, then it may become difficult for them to handle all of these things. Okay, yeah. And now throughout our discussion, as we'll continue, various requirements will come which are all getting covered through LODR regulations only. Okay, yeah. Other than LODR regulations, we should also remember the fact that we are discussing a company. Because if a company is getting listed, then it's a company. And for any company, other than LODR regulations, various other laws and regulations will also be applicable. So if a company becomes listed, that doesn't mean that all other laws and regulations will not apply. So these are over and above the existing laws and regulations which will apply to a company. So if you look at the requirements of Companies Act, will they continue to apply? Of course, yes. So at times you'll see that some of the provisions in relation to one area are covered by Companies Act, and over and above that, some more requirements in relation to that area are also covered by LODR regulations. And one of that example can be the Audit Committee. If you remember, Audit Committee has been discussed under the Companies Act. Yes or no? This is covered under the Companies Act. There are various provisions of the Companies Act in relation to Audit Committee of a company. Over and above that, various regulations are also available or required to be followed in relation to Audit Committee, which are mandated by LODR regulations. Okay, yeah. So let's discuss about the Audit Committee requirements. And we all know about Audit Committee. What's an Audit Committee? It's a separate committee. And we all know about various functions of the Audit Committee, correct? Now we'll move forward on that. We'll try to understand in greater detail as to what all functions, what all responsibilities, what all procedures are required to be performed by the Audit Committee. The summarized requirements of corporate governance in relation to the Audit Committee. Let's understand what are those. Qualified and independent Audit Committee. Every listed company shall constitute qualified and independent Audit Committee in accordance with terms of reference subject to following. So the Audit Committee should be qualified and independent subject to following. It shall have minimum 3 directors as members. Means at least 3 directors are required. 2/3 of the members of Audit Committee shall be independent. Okay. However, in case of listed entity having outstanding superior right equity shares, Audit Committee shall only comprise of independent directors. So it requires that out of 3, 2/3 means 2 should be independent directors. But in case of this special types of equity shares, in case the company will have, then all the 3 should be independent. And then comes the requirement of qualification. The members should be financially literate, and at least one should have accounting or related financial management expertise. Means he should be expert in the area of accounting or related financial management. So let's understand, what do we mean by financially literate? Means he should be able to read and understand basic financial statements. That doesn't mean he has to be an expert in that area. And you may be thinking, sir, why is that required? Why is not required to be an expert, and why it is only about one? See, when you look at the Audit Committee is not only there to discuss the financial statements. The role of the Audit Committee is not only limited to financial statements. There are so many functions in the organization. And for all of those functions, committee is required to work on. So that's why we don't need the experts in the field of accounting only when we look at the Audit Committee. There are various operational requirements. There are various legal requirements which the committee will have to look at. But because the committee will also be focused on the financial statements, financial reporting of a company, so that's why it becomes important that at least one member out of them understands the financial reporting. Okay. The other part is about having accounting or related financial management expertise, which is possible if he or she possesses experience in finance or accounting, or requisite professional certification in accounting, or any other comparable experience or background which results in individual's financial sophistication including being or having been a CEO, CFO, or other senior officer with financial oversight responsibilities. So if he would have played this role, then it will be easier for the audit committee to execute that role in the organization that we are going to discuss. Otherwise, they will not be able to get involved into the things and take care of the things or direct the things because they will not have the knowledge. Yeah. Next requirement. So we were discussing about the audit committee requirements. Next, chairman of audit committee shall be independent director. Means only an independent director can become the chairman. And he should be present at the AGM. So in case of an AGM, he should be present and address the queries of the shareholders. Okay. The company secretary of the company. So if we talk about the company secretary, he shall act as secretary to the committee. The company secretary will also be acting as secretary to this committee. This committee means audit committee. Audit committee at its discretion shall invite the finance director or the head of the finance function, head of internal audit, representative of statutory auditor. Statutory auditor means the team, and generally this representative will be the senior member of the audit team, which will include partner, okay, or maybe the director or manager, as the case may be, in their team, and any other such executives to be present at the meetings of the audit committee, provided that occasionally audit committee may meet without the presence of any executives of the listed entity. Okay, yeah. So let's understand about the requirements of meetings of the audit committee. Audit committee shall meet at least 4 times in a year. Okay. So in a year, 4 meetings are required and not more than 120 days shall lapse between 2 meetings. So effectively, what do you mean? Every quarter there should be a meeting. Otherwise, this condition will be difficult to be fulfilled. Every quarter it's better to have a meeting. Quorum shall be 2 members or 1/3 of the members of the audit committee, whichever is greater, but there should be minimum 2 independent directors present. Only then the quorum will be considered to be there. Okay. Simple one, easy one. Powers. Let's understand what are the powers which the audit committee will have. First, auditor should check whether the terms of reference of the audit committee have been suitably framed, mentioning the above powers. It is mandatory for the above mentioned 4 powers to be vested in the audit committee. The board may delegate vest further powers to the committee. So what are these powers? To investigate any activity within its terms of reference. To seek information from any employee. To obtain outside legal or professional advice if required. To secure attendance of outsiders with relevant expertise if it is considered necessary. Okay, so these are the 4 powers. Now in the context of various functions, now please understand, in relation to various functions which the audit committee will be required to work on, therein these powers may be used or applied by the audit committee. So let's now understand what are the functions, what are the roles of the audit committee, because in these cases those powers may be used. So let's understand what's the role of the audit committee. Oversight of the company's financial reporting process. So first thing, something that we already know, oversight of this entire process of financial reporting and disclosure of its financial information to ensure that the financial statement is correct, sufficient and credible. Next, recommendation for appointment. First we can say it's about financial reporting process. Number 2, recommendation for appointment, remuneration and terms of appointment of auditors. So we can say number 2 is about appointment of auditors. In this case, please understand that audit committee is not appointing the auditors. No, they are recommending for appointment. Who will then appoint? Board of directors after the recommendation of the audit committee. All right. Yeah. Approval of payment to statutory auditors in case statutory auditors are also providing some other service other than statutory audit. Approval of payment to statutory auditors for any other services. So the reason why I'm marking all of these pointers is that this is how you should also try to mark. And I'm just slightly digressing from the discussion regarding the roles of the audit committee. See, as I have told you that for the purposes of your exams, you will need short notes, you will need summaries. So the way I have just tried to highlight these pointers out of the sentence, this is something you should also try to do, or maybe create short notes, because at the time of exam you will not be able to read this entire stuff. By looking at few documents which will have only the summaries or these few pointers or few words, you should be able to understand or remember about the complete sentence. Yeah, so that's why I am sort of highlighting or marking these points. Okay. Next, reviewing with the management annual financial statements and auditor's report thereon before it is submitted to the board for approval. So reviewing annual financial statements. So first of all, annual financial statements and the auditor's report will be discussed with the audit committee. Then it will go to the board for their approval. Okay. Now in this case, what will the audit committee review? Matters required to be included in the director's responsibility statement. So some of these matters as to how those have been covered in the financial statements. Changes, if any, in the accounting policies and practices. So if there have been any changes in the accounting policies, if there are change in the accounting practices, this is something audit committee needs to understand as to why that change was required and whether this is relevant in the context of the financial statements of the current year or not. Major accounting entries involving estimates, very, very important area. Major accounting entries, estimates. Okay. Significant adjustments which were made in the financial statements through audit findings. Now audit committee needs to know that why a lot of adjustments were passed in the financial statements only because auditor pointed out. Because it shows that maybe the management was not really competent. Yeah. Or maybe there were some other problems because of which management could not get the financial statements ready in a way that auditor would not have required to bring in so many adjustments. That's a very important area audit committee needs to understand. Compliance with listing and other legal requirements relating to financial statements. Disclosure of related party transactions, another very, very important area. Modified opinion. This is something which audit committee would want to know, would want to understand as to why this is required and what are the reasons. Next, reviewing with the management quarterly financial statements before submission to the board for approval. Now, in case of a listed company, other than financial statements which are given at the year end, every quarter financial results are also required to be published, which includes financial performance of the company. So it's about the P&L. Yeah. Now, in relation to these financial results which are required to be given, again, it's a part of the financial reporting process. It may not be a complete set of financial statements, but it's a financial analysis, or sorry, it's the financial number of the entity which will be available in the public domain, which will be given to the stakeholders, which will be given to the general public at large, and that's why it becomes again important to review it. And who has the responsibility to review this? Audit committee. Then reviewing with the management, and everywhere when we say reviewing with the management means management has done this and now it has come to audit committee and they are discussing this with the management, including the auditors. So that is how these things generally happen. Reviewing with the management the statement of uses or application of funds which were raised through an issue. It may be a public issue, right issue, preferential issue. Statement of funds utilized for purposes other than those stated in offer document, prospectus, notice, and report submitted by the monitoring agency monitoring the utilization of proceeds of public or right issue and making appropriate recommendations to the board to take up steps in this matter. So this is all about utilization of the funds and the raising of the funds. Reviewing and monitoring the auditor's independence. Now this is another very, very important area. See, this entire financial reporting process has to be supervised by the audit committee. Over and above that, if we look at this audit process, whether it's about the internal audit or the statutory audit, both of these processes are also supervised by the audit committee. Auditor is recommended by the audit committee. That doesn't mean that auditor has to be a person of the choice of the audit committee. No. Out of various auditors who may be appointed or who are eligible for appointment, one of them is chosen, and for that audit committee would have given various considerations as to the merits of the auditor. So this entire process also involves ensuring whether the auditor is independent or not. Correct? And again, you may be thinking, but sir, that anyways is required to be ensured by the auditor. So why will this audit committee do this? See, other than the auditor, it's also the responsibility of the management or the entity to ensure that whatever was required to be done by the auditor was valid or was correctly done by him or not. So it's two-way check. Auditor should obviously do that on his own, but the management or this audit committee also needs to take care of this requirement. Okay? Approval or any subsequent modification of transactions with the related parties. Now this is again the role of audit committee. Scrutiny of intercompany loans and investments. They need to understand all of these intercompany loans. Intercompany means which have been given or sort of taken to other corporates, including the investments. Valuation of undertakings or the assets of this company. Evaluation of financial controls. It's about the IFC. Again, something which we can draw from the requirements of IFC, but over and above that, there could be various other controls which the audit committee needs to look at. Because the role of the auditor is limited to those controls which are limited to financial statements, but management will not be limited to that. Management needs to look at all the internal controls. Okay? Then reviewing the performance of statutory and internal auditor means again supervising their process. Reviewing the adequacy of internal control systems. We are not talking about internal financial controls. We are talking about internal control systems. Review of that is responsibility, is the role of the audit committee. Reviewing the adequacy of internal audit function. So an entity may also have internal audit function as to whether that function is operating effectively or not. Is the responsibility, is the role of whom? Is the role of audit committee. So they need to ensure that. Okay. Then discussion with the internal auditors in relation to their significant findings. This is again the role of the audit committee. Reviewing the findings of any internal investigations by the internal auditors into matters where there is suspected fraud or irregularity or a failure of internal control systems, and then reporting of that matter to the board. This is again the role of the audit committee. Okay, yeah. Discussions with the statutory auditors in relation to what? Discussions with the statutory auditors before the audit commences about the nature and scope of audit, as well as post-audit discussion to ascertain any area of concern. This is again the responsibility of the audit committee. To look into the reasons for substantial defaults in the payment to depositors, debenture holders, shareholders in case of non-payment of dividends which have been declared, which will generally not happen, and the payment of creditors. To review the functioning of whistleblower mechanism, approval of appointment of CFO. Who will do that? Audit committee. Why? Because they are involved in financial reporting mechanism, and CFO will be a part of financial reporting process. Okay. Now, assessment of this qualification, experience, background of this person who needs to be appointed as CFO. It comes to the audit committee. Carrying out any other function which may be mentioned in the terms of reference. Reviewing the utilization of loans or advances from or investment by the holding company in the subsidiary exceeding rupees 100 crore or 10% of the asset size of the subsidiary, whichever is lower, including existing loans, advances or investments. So one is about any new loan taken, any new investment. Other thing is the existing one. So review of utilization of all of these amounts is required to be done by the audit committee again. Okay. If the company has set up an audit committee as per the requirements of Companies Act, the company must ensure that the said audit committee has such additional functions or features as are contained in the LODR regulations. Now, as I told you, that audit committee may come from the requirements of Companies Act other than this LODR regulations. And both the laws or the regulations may require different activities, different roles and responsibilities. Both of them are required to be ensured. So if a company will have an audit committee, that audit committee will have to go by both requirements of Companies Act as well as LODR regulations. Okay, yeah, it cannot really limit itself to only one law. Okay, all right. Now, audit committee as per the Companies Act. Audit committee as per the Companies Act will be constituted by every listed public company or following classes of companies. So let's see which all companies are required to constitute an audit committee as per the requirements of Companies Act. All public companies, means private companies are not covered over here. All public companies having a paid up capital of 10 crore or more. So first criteria is paid up capital, 10 crore or more. We can say paid up capital 10 crore or more. Let me just clear this up. Other criteria is about turnover. In case of turnover, it should be 100 crore or more, greater than equal to 100 crore. All public companies having in aggregate outstanding loans, debentures and deposits, means total of these three. So it's not about individual loan, individual debenture, individual deposits. No. Total of these three exceeding 50 crore. Now in this case, it's not 50 crore. It's exceeding 50 crore. Yeah. To these companies, audit committee's constitution is required. All right. And why is this required? Because this is as per the Companies Act. And over and above that, if a company is listed, then automatically it will be required to have audit committee. Yeah. Following classes of unlisted public company shall not be covered. Which are those? JV, wholly owned subsidiary, dormant company. Okay. Now moving further on to the functions of the audit committee. So let's understand about the functions of the audit committee. Every audit committee shall act in accordance with terms of its reference, which are specified in writing by the board of directors and which will include the following: the recommendation for appointment, remuneration, terms of appointment of auditors. And which are these auditors? Statutory auditors. Review and monitoring of auditors' independence. Number 2. Examination of financial statements. You may be thinking, sir, all of these points we have discussed. No problem. These are coming from the Companies Act requirements. Approval of subsequent modification of transactions with related parties. And you may be thinking, sir, is it not a duplication? Absolutely not a problem. See, just that two laws require these points to be taken care of. Till the time they are not contradictory, there's no problem. Okay. Now, in relation to related party transactions for which approval of audit committee is required, some of the companies may have various related party transactions, or we can say multiple related party transactions throughout the year. And it may be difficult to take the approval of audit committee every time a transaction is carried out, or before every time a transaction is carried out, because practically it will become very difficult. Let's suppose there are 100 transactions. So will the company seek 100 approval before carrying out the transaction? It will be difficult. So that's why what will the company do? Companies would take omnibus approval. What is this omnibus approval? Omnibus approval is that for one nature of transactions, they will seek approval of audit committee to be carried out during the year. Okay. Next function is scrutiny of intercorporate loans, which again may be considered to be a duplication, but it's a function. Valuation of undertakings or assets of the company wherever it is required. Evaluation of internal financial controls and the risk management system. Monitoring the end use of funds raised through public offers. Okay, these are all functions. Then the audit committee may call for comments of the auditors about internal control system, scope of audit. In fact, they will not only call upon, as we have discussed under the auditing standards requirements, all of these things are communicated by the auditor to the audit committee. So this will definitely happen, but this is also the function. This is also the requirement on the part of the auditor, on the part of the audit committee, to have these things from the auditor wherever it considers appropriate. Audit committee shall have authority to investigate into any matter in relation to point number 4. What was the point number 4? All of these functions. Okay. Auditors of the company and the KMP shall have a right to be heard in the audit committee meeting. Means they will have communications with the audit committee. They will have discussions with the audit committee, and they will have a right wherein they will speak about the points they would have raised, observations they would have raised, or maybe the qualifications they would have brought in. The board's report under section 134 subsection 3 shall disclose the composition of audit committee, and where the board had not accepted any recommendation of the audit committee, same shall be disclosed in such report along with the reasons therefore. Correct? Every listed company or such class or classes of companies as may be prescribed shall establish a vigil mechanism for directors and employees to report genuine concerns in such manner as may be prescribed. This is again the function of the audit committee to ensure this. And this vigil mechanism, what is this vigil mechanism? As I told you, we'll have a discussion around this in more detail as we move forward. This shall provide for adequate safeguards against victimization of persons who use such mechanism, and make provision for direct access to the chairperson of the audit committee in appropriate or exceptional cases. Okay. Next comes the point that is around review of information by the audit committee. So let's see what is that information that is mandatorily required to be reviewed. What is that information? The auditor shall ascertain from the minutes books of the audit committee and other sources like agenda papers, etc., whether the audit committee has reviewed the above mentioned information. The auditor should ascertain whether as part of director's report or as an addition thereto, MD&A. What is MD&A? Management discussion and analysis. Forms part of annual report to the shareholders. The auditor should further ascertain whether MD&A includes discussion on the matters which are stipulated under the required schedule. So what are these set of points which are required to be looked at? So let's understand. One is MD&A, something that we have just discussed. Statement of significant related party transactions. This is another thing which is required to be carefully reviewed. Management letters or the letters of internal control weaknesses issued by the statutory auditors. Internal audit reports relating to internal control system. Appointment, removal, terms of remuneration of chief internal auditor shall be subject to review by audit committee, and statement of deviations. Now this statement of deviation again is something we'll discuss in more detail. It's a quarterly statement which is required to be given. Okay, but we'll discuss this in more detail as we move forward. Yeah. Now moving further on to the role of auditor in audit committee and certification of compliance of conditions of corporate governance. Yeah. Now this regulation means we are talking about LODR regulations, stipulate that a representative of statutory auditor, when required, shall be invited to the meetings of audit committee. Means he will sit in the audit committee meeting. He will be one of the persons who will be there in the audit committee meeting. Similarly, section 177 of the Companies Act provides the auditors of the company and KMP the right to be heard in the meetings of the audit committee when it considers the auditor's report, but they shall not have the right to vote. So let's suppose the auditors are there in the audit committee, meeting. So what is their role? They will be there to explain the things. They will be there to discuss about their audit report. That doesn't mean they will have a right to vote. No, they are not the voting members. They are only the members for a specified discussion. Okay. The auditor must ensure that he communicates frequently and openly with the audit committee on key accounting or auditing issues that, in the auditor's judgment, give rise to greater risk of material misstatement of the financial statements, and also ensure that he addresses any questions or concerns voiced by the audit committee. So one is to explain everything which the auditor needs to do. Means his process, his documentation, his key issues, the matters that he want to bring to the knowledge of the audit committee. All of those things will be discussed. At the same time, audit committee may also have questions, may have queries, may have concerns around the audit. So all of those will be addressed by whom? Statutory auditor. Okay. He can contribute significantly in assisting and advising the audit committee as to how this corporate governance system or the process can be improved. Oversight of financial reporting process, implementation of accounting policies, compliance with accounting standards, strengthening of internal control system. All of these things are the areas on which statutory auditor would be working on. Yeah. Because during the course of his audit, he might have come across various weaknesses, various improvements, which can be done by the company. So that's why auditor can contribute significantly if he can bring in all of these points or he can just bring all of these points to the knowledge of the audit committee, assist the audit committee by discussing all of these points with them as to how these things can be improved. But at the same time, you need to understand that auditor will not get into improvement of this. Auditor will not get into the management function. He is only advising on the basis of his audit procedures. That's it. Okay. Now this para is very, very important, which I am just marking over here. That auditor should not forget his independence. When we say he can just assist the management, assist the audit committee, he needs to keep in mind that his role is not to drive the corporate governance directly. He will not do that. He will not get into the management function. Rather, it's the management responsibility to do so, and in the process, he should play a significant role in assisting the management to ensure that better standards of corporate governance are there, or the standards of corporate governance are getting better, improved. Okay, only that assistance he will provide on the basis of whatever work he has been doing. All right, yeah. And this also doesn't mean that he will be required to do some extra work for this. Clear? Yeah. Okay, now moving further on to the auditor's responsibility. Now, auditor has a responsibility in certifying compliance with requirements of corporate governance relating to verification and certification of factual implementation of requirements of corporate governance. Now, please understand that such a verification or such a certification, we cannot say that's an audit wherein opinion is expressed. No. It's only a certification which is required to be done by the auditor in relation to the corporate governance system for better corporate governance, for improving the corporate governance, we can say. Yeah. The certificate from the auditor as regards compliance with requirements of corporate governance is neither an assurance as to the future viability of the company, nor the efficiency or effectiveness with which management has conducted the affairs of the company. Okay. Now moving on to the next point, and that is about verifications regarding composition of the board. Let's understand what does it mean. Auditors should ascertain throughout the reporting period whether the board of directors comprise an optimum combination of executive and non-executive directors. Now, regarding the composition of board of directors, there are two things. One is that what should be the minimum number of directors in the board. Second is that out of the total directors, how many should be independent, how many should be women directors. There are various provisions which come from the regulations or the legal requirements. Auditors should ensure that these things have been taken care of. Yeah. So for example, board of director should comprise executive as well as non-executive with at least one woman director and not less than 50% of board of directors comprising non-executive directors. So this is the requirement, and auditor should ascertain whether this is met or not. Now, board of directors of top 500 listed entities. This is a provision which will apply only to top 500 listed entities. shall have at least one independent woman director, and board of directors of top 1000 listed entities shall have at least one independent woman director starting from 1st April 2020. Okay, clear? Auditor should also ensure that no listed entity should appoint a person or continue the directorship of any person as a non-executive director who has attained the age of 75 years. So in case director is of the age of 75 years, he should not be continuing or should be appointed unless special resolution for this is passed. Okay, yeah. Directors of listed entities shall comply with following conditions. What are those conditions? Person shall not be a director in more than 8 listed entities, and with effect from 1st April 2020, not in more than in not more than 7 listed entities. Okay. Notwithstanding this above provision, any person who is serving as whole-time director, managing director in any listed entity shall serve as independent director in not more than 3 listed entities. This is another requirement which needs to be considered. The minutes of the board of directors meetings should be verified to ascertain whether a director is an executive director or non-executive. Now, as an auditor, how will he ensure this? The way to verify this is, one, the minutes of the board meetings. Second is to have the details of the board of directors from the company secretary, which he can also verify on the records of MCA, Ministry of Corporate Affairs. So today, if we need to check regarding the details of the directors, of a company, these things are updated on the portal of MCA. So that is another audit procedure which the auditor can perform to verify some of these information. Yeah. Similarly, there are various requirements in relation to ensuring the number count, etc., which the auditor needs to look at. So I'm not really getting into those numbers and all you can read. Then comes another point and an interesting point which is about limited review. So let us first of all understand what is a limited review, and then we'll get into the details around the limited review. So what's a limited review? See, one is statutory audit, wherein procedures are performed through which auditor will obtain reasonable assurance. And through this reasonable assurance, he expresses an opinion on the financial statements. Remember the audit report and remember the audit procedure. Remember the meaning of audit. Auditor obtains reasonable assurance and expresses an opinion. Now, when it comes to reasonable assurance, it will mean that auditor will perform procedures so that he is reasonably assured to an extent that he is in a position to express his opinion. But he is not checking everything 100%. It's not about absolute assurance. It's about reasonable assurance. Absolute assurance will mean he is checking everything, wherein instead of true and fair view, he can get into true and correct. Remember some of these points? Yeah. Now, a diluted form of this reasonable assurance or a diluted form of this audit is called as limited review. In case of a limited review, auditor will not get reasonable assurance. No. And because it's a diluted form, that's why auditor will not be expressing an opinion. Instead, he will be giving a conclusion. He will not express opinion. He will give a conclusion and his assurance will be negative. So he'll say that nothing has come to his notice around the known compliance or nothing he could observe on the basis of which he can say that things are not good. Wherein he will perform limited procedures as compared to an audit. Now for a listed company, as we have discussed, that every quarter they are required to give financial results. Correct? That's why a listed company will also be required to get their financial results reviewed by the auditors of the company. Now, if the auditors want to perform audit on that, they can do this, but this review has to be performed. Now, in relation to this review, what is the requirement? So let's suppose there are three entities, A, which is the parent entity, B and C, which are the subsidiaries of A. Now A will have their auditor, and let's suppose for B and C there are different auditors. Now for A, who will perform the limited review? Its auditor. For B, whose financial information will form part of consolidated financial information of A, who will perform the limited review? Auditor of B. Similarly for C, it will be auditor of C. Now comes a question that this information which has been provided by B and C and which is moving into consolidated financial results of A or the group, is there any procedure that is required to be performed by the auditor of A over and above what B and C would have done? And you may go back to the requirements of SA 600. You remember, using the work of another auditor that we discussed in the previous session. Therein we discussed that some of the incremental procedures may be performed by the parent auditor wherever he considers that appropriate. In that context, we have this requirement of limited review of all the entities whose accounts are to be consolidated with the listed entity. Statutory auditor of a listed entity shall undertake limited review of audit of all the entities, companies whose accounts will get consolidated with the listed entity as per AS or Ind AS in accordance with the guidelines issued by SEBI in this matter. Consequently, all the listed entities whose equity shares or convertible securities are listed, statutory auditors of such entities, all entities whose accounts are to be consolidated, and statutory auditors of entities whose accounts are consolidated with the listed entity shall comply with the prescribed procedure. So let's understand this. What is required? I think we can just understand this better with the help of a small example. So we are talking about A, and below A we have B and C, something that we just discussed. So one is the auditor of A, A1, auditor of B, A2, auditor of C, A3. Now here consolidated financial results are getting prepared. For A, limited review of A is performed by A1. So A1 is happy with this. But for B, its limited review is not performed by A1. So that's why now the point comes whether A1 needs to perform any procedures in relation to B and C or the financial results of B and C which are forming part of consolidated financial statements, consolidated financial results. In this relation, similar to what you discussed or something what we discussed under SA 600, A1 will have discussions and inquiries with A2, A3, wherever it considers appropriate. He may assign certain important matters to be taken care of by these auditors. He may want to have discussions with the management of these two entities. These are some of the incremental procedures which A1 can perform in relation to the financial results of B and C, because these are not reviewed by A1, these are reviewed by different auditors. Clear on this? Yeah. All right. Now moving further and to part related to remuneration of the directors. Now there are certain disclosure requirements. Regarding directors' remuneration. Before that, I have a query from Gigi, so let me just quickly get on to the query of Gigi. Gigi is saying, sir, whether small subsidiaries of listed entities are also required to be reviewed by the entity auditor and submitted to the holding company quarterly. The answer will be yes. Now, whether the limited review of small entities will be required or not, the first answer will be yes. But at times, it may happen that the parent auditor has considered this small entity to be immaterial, insignificant. So that's why he has not included this entity into his scope, or the scope of whether this entity will be reviewed or not is decided by the parent auditor. So if the parent auditor would believe, no, this is immaterial and that's why he would not want any procedure to be performed on this, he may do that. So basically the scope around all of the group companies, whether they will become subject to audit, limited review, analytical procedures only, remember we discussed earlier, is all decided by the parent auditor. Okay, and I am assuming that this small entity of listed company that you have been saying is not listed itself, because if it's also a listed company, even though it may be a small company, if it's listed, then of course its limited review will be mandatory. But if it's not listed, it's only required to pass on the financial results for the purposes of consolidation of its parent, which is a listed company. Therein, whether it will be covered under the scope or not has to be decided by the parent auditor, and accordingly the procedures will be performed. All right, Gigi, clear on this? Any more questions from your side? No? Okay, great. Remuneration of directors. So there are certain disclosure requirements regarding directors' remuneration. Let's understand what are those. All pecuniary relationships or transactions of non-executive directors, those need to be disclosed in the annual report. We are not saying financial statements, we are saying annual report. Criteria of making payments to non-executive directors. This may also be disseminated on the listed entities website, and in the annual report a reference may be given of the website, that on the website this information is available, and this is something which is commonly done. In addition to the disclosures required under Companies Act, following disclosures will also be required to be given in the annual report. All elements of remuneration package, such as salary, benefits, bonuses, stock, those are required. See them in the details of fixed component and variable component. Both of them are required to be disclosed. Service contracts, notice period, severance fees, stock option details in case they have got any stock options like ESOPs, etc. Those are also required to be disclosed. Okay, yeah. Then comes the point around approval of remuneration of directors. All fees, compensation, if any, paid to non-executive directors, including independent directors, shall be fixed by board of directors and shall require previous approval of shareholders. Okay. However, approval of shareholders by special resolution shall be obtained every year in case annual remuneration payable to single non-executive director exceeds 50% of total annual remuneration payable to all non-executive directors. These are some of the limits I would suggest you should just try to remember, because there can be questions based on this. Yeah, you may be thinking, sir, do we need to just mug up all of these requirements? Do we need to learn all of these requirements? I would say at some times, yes. Some of these requirements you'll have to learn, you'll have to remember, because you can expect some questions based on these. Okay. The requirement of obtaining prior approval of shareholders, like we just discussed, shall not apply to payment of sitting fees to non-executive directors. So prior approval not apply to payment of sitting fees, provided it's within limit, if made within the limits. Now, what are those limits? We are not getting into those limits as of now. Okay. The fees or compensation payable to executive directors who are promoters or members shall be subject to approval of shareholders by special resolution in the general meeting if annual remuneration payable to such executive director exceeds 5 crore or 2.5% of the net profits of the listed entity, whichever is higher, or where there is more than one such director, aggregate annual remuneration to such director exceeds 5% of the net profits of the listed entity. Okay, clear on this? Now, in this context, let's understand what is it that the auditor will be required to do. Because for us, as we keep discussing, what is important? What is it that the auditor will be required to do? Though, of course, we need to remember all of these provisions, because as an auditor, all of these provisions will have to be taken care of by the auditor, and that is only possible when he will know about all of these provisions. So first, auditor will get to know about all of these things from the minutes of the AGM, of the board of directors, of the audit committee. He can get onto those documents regarding the notices, explanatory statements, etc. He can refer to the articles of association of the company wherever it's applicable, so to check whether all of these provisions have been covered in the articles or not. Yeah. Examine the report of board of directors on corporate governance to be included in the annual report and ascertain whether the same contains disclosures with respect to remuneration of the directors or not. Correct? And then the most important aspect, like we have discussed, it's about the other information. You remember we discussed auditor's responsibilities in relation to other information. So all of these things are what? They are all other information which is flowing in the annual report. And many of these things will also be covered in the financial statement. So can you just draw a reference now? Can you link these two? So now we are looking at the other side. We are not looking at the financial statements, but as an auditor, he needs to ensure that these two remain consistent, because that's the responsibility of the auditor. And in case there are any inconsistencies, those are required to be removed at either of the places on the basis of whatever is the correct information. Otherwise, reporting implications are there, which the auditor will have to consider. Okay, clear on this? Okay, then comes the next point around the obligations with respect to employees, including senior management, KMP, directors, promoters. Now this is all about setting up the limits or the numbers. So let's quickly get on to some of these requirements. Board shall meet at least 4 times a year. And the maximum gap between 2 board meetings is 120 days. So effectively, what do you see? Board will meet at least once every quarter as a mandate. Yeah. Quorum for the board meeting of top 1000 listed entities, top 2000 listed entities with effect from 1st April 2020 shall be 1/3 of its total strength, or 3 directors, whichever is higher, including at least 1 independent director. So this is something which you'll see very commonly. The role of independent directors have now increased significantly. Okay, yeah. For the purposes of these provisions, certain limits are to be considered, but I'm not really getting onto all of these limits. I think all of these limits you can just read separately. Moving on to the meetings of the board of directors. Now, as per the Companies Act requirements, every company shall hold first meeting of board of directors within 30 days of its incorporation, and thereafter minimum number of 4 meetings of board of directors every year, and therein again the gap should not be more than 120 days. So that means effectively every quarter there will be a board meeting. Yeah. In case of Section 8 company, this provision of Companies Act shall apply only to the extent that the board of directors of such companies shall hold at least 1 meeting within every 6 calendar months. Now again, this is a part, and this is something which can sort of lead to some questions. So in exam, let's suppose if I talk about a situation. Now this is a company, and this company is Section 8 company. This is required to create this is required to have this set of board of directors, wherein this will be the number of the board of directors, this will be the composition of the board of directors, and the board meets, let's suppose, every quarter. So is it a mandate or it is not a mandate? And we are talking about a Section 8 company. Or maybe they say that, let's suppose, every 6 months they have been meeting. So is it fine or not? Yeah. So these are some of the provisions which you'll have to again remember, because otherwise some of these questions may really trouble you. Okay, yeah, clear on this? Now, if you look at both LODR regulations and the Companies Act, Section 173 is about the Companies Act. They both stipulate that board shall be meeting at least 4 times a year, and that the maximum time gap between 2 meetings shall not exceed 120 days, except for certain specified companies. What are those certain specified companies? Can any of you tell me what are those certain specified companies quickly? Can any of you tell me about these certain specified companies which I have just marked on the presentation quickly? What are these certain specified companies? Quickly, let me just see who can answer this. All of you, quickly. What are these certain specified companies? I think we have just talked about it. So that's why it will be very, very easy for you to answer quickly. What are these certain specified companies? Yes, tell me. What are these certain specified companies. I'm waiting for a response. Quickly. Yes, these certain specified companies will include Section 8 company, which we just discussed. Why? Because they can have meetings every 6 calendar months instead of quarterly. Correct? Now, what will the auditor do in this case? So let's understand the procedures. He will first of all look at the minutes of the board meetings, through which he will get to know whether the meetings have been conducted or not. Yes or no? That's the first thing through which he will check it. And he can also look at the composition, etc., by looking at the director's details, which can be made available to him through the secretarial records. And need not again mention, as I have told you, all of these things can be checked, all of these things can be verified by the auditor by also having access to the information about the directors in the MCA portal. Directors are also required to give declarations on an annual basis to the company. That will also form one of the bases for the auditor to verify some of these provisions. Okay, yeah. Now, as regards the consideration of laws and regulations in the audit of financial statements, I think we have had discussions around it. You remember? We have had discussions around it. It's the management's responsibility. Whose responsibility is this? Management's responsibility to ensure that company's operations are carried out in relation to, in accordance with laws and regulations. What's the responsibility of the auditor? Auditor's responsibility is limited to verification whether the management has done what was required to be done by them or not. Very simply. So, the responsibility to ensure that the laws and regulations have been complied with or not is not with the auditor, it's with the management. But auditor needs to ensure whether the management is doing that properly or not. Okay, and in case it's not done, then he will have to evaluate the impact, and basis that he will have to either get the adjustments done in the financial statements or report those matters. All right, clear on this? Now we'll move on to some of the requirements related to code of conduct, vigil mechanism. You remember some of these things we have been parking up. We have been saying, okay, this thing we'll do later. Vigil mechanism we'll discuss later. Some of these things now are going to be covered by us. But before that, we can then now take a quick break of 10 minutes and after Hi, welcome back. So we'll now continue with our discussion on this LODR aspect. So we were talking about some of these provisions that we have been parking us. So the first one in that respect happens to be the code of conduct. Now, code of conduct should be a familiar term to all of you. It's the same meaning. There has to be a code which is prescribed in relation to the conduct of the organization. Now, this code of conduct is in respect of the organization as a whole. Now, towards this code of conduct, somebody will have to take the responsibility. And what is that? So let's understand. The board shall lay down a code of conduct for all the board members and senior management of the company. All the board members and senior management personnel shall affirm compliance with this code of conduct on an annual basis. Annual report of the company shall contain declaration to this effect, which will be signed by the CEO that whether this has been done or not. Code of conduct shall also be posted on the website of the company. Code of conduct shall suitably incorporate duties of independent directors. Yeah. Now, in this case, what will be the senior management? It will include personnel of the listed entity. Personnel of the listed entity who are the members of its core engagement team, excluding board of directors. Normally, this would comprise members of management one level below CEO, managing director, whole-time director, manager, including CEO, manager in case they are not part of the board, and shall specifically include company secretary and the CFO. All right. Now, in respect of this, the auditor should ascertain whether the board of directors has laid down a code of conduct or not. He should also verify whether the board members and senior management personnel as required, they affirmed compliance with this code of conduct on an annual basis or not, and whether this code of conduct has been posted on the company's website or not. Okay. Moving on to the next part, that is about vigil mechanism. Now, what is this vigil mechanism? See, the listed entity shall establish a mechanism. So you can say it's a system or a process for directors as well as employees to report their genuine concern. So in case any of the employee will have any concern, and in case he wants to reach out to somebody, so this is the mechanism or this is the system through which he can just raise his concern. All right. This mechanism should also provide for adequate safeguards against victimization of directors or the employees or any other person who avails this mechanism or who is moving through this mechanism, and also provide for direct access to the chairperson of the audit committee, because he may be reaching out to the chairperson of the audit committee in respect of his concern. So because he has been complaining it, so let's suppose if there is an employee who has a complaint as regards, say, let's suppose the senior management, so he may reach out to the audit committee, he may reach out to the chairman of the audit committee directly. But if he does that, he should not be victimized. Okay. The details of establishment of such mechanism shall be disclosed by the company on its website and in its report of the board of directors. Okay. Yeah. Then comes the understanding about material subsidiary. So what is material subsidiary? If you look at the regulation number 16C, material subsidiary will mean subsidiary whose income or net worth exceeds 10% of consolidated income or net worth of the listed entity and its subsidiaries in the immediately preceding accounting year. Means it has to be 10% or more. Sorry. it exceeds 10%, so greater than 10%, wherein we are looking at consolidated income or net worth. Then let's move on to regulation number 24(1). It provides at least one independent director on the board of directors of the listed company shall be a director on the board of directors of unlisted material subsidiary. Okay. Now for the purposes of this regulation, now this is very, very important. You need to be very, very careful in this point. For the purposes of this regulation only, now this regulation uses a term material. Now what is this material? You may think, sir, material subsidiary we have just discussed. The answer is no. For the purposes of this regulation only, the meaning of material subsidiary is different. Material subsidiary shall mean a subsidiary whose income or net worth exceeds 20% of consolidated income or net worth respectively. So in this case, it's 20% instead of 10%. Yeah. And now you may be confused. You may say, sir, at one place it's 10%, another place it's 20%. So which one do we consider where? So 10% is considered everywhere except in case of regulation 24(1), wherein you will consider this to be 20%. Okay. Yeah. Then comes the various requirements in relation to all of these subsidiaries and parent, etc. Audit committee of listed entity shall also review financial statements, in particular investments made by unlisted subsidiary. Minutes of board meetings of unlisted subsidiary shall be placed at board meeting of listed entity. Management of unlisted subsidiary shall periodically bring to the notice of board of directors of the listed entity a statement of all significant transactions and arrangements which it entered into. Now, what are these significant transactions or arrangements? This has also been defined. Those that exceed 10% of total revenue or total expenses or total assets or total liabilities. Company shall formulate a policy for determining material subsidiaries, and such policy shall be disclosed in the annual report as well as company's website. Okay, yeah. I think some of the important aspects around this was about assessment of how the material assessment of the material subsidiary means, as to how that will be determined, which we have covered. Then move on to next regulation, regulation 24(a), which talks about secretarial audit of listed entity and its material unlisted subsidiaries. Every listed company and its material subsidiary company incorporated in India. So this is something which will apply only to companies incorporated in India. Okay. Shall undertake secretarial audit and shall annex with its annual report of that secretarial audit given by company secretary in practice in such form as may be specified. Again, that has been specified. Clear? Moving on to next type of committee, nomination and remuneration committee. Let's understand what would this committee do. Board of directors of every listed public company shall constitute nomination and remuneration committee, which shall comprise. So that means every listed company will have this. Every listed company will have this committee, nomination and remuneration committee. And this will comprise at least 3 directors, all of whom shall be non-executive, and at least half shall be independent. Okay, and similar to the provision that we discussed earlier, in case of an entity having special right equity shares, then this half will not remain. all the directors have to be independent directors. Okay. Chairperson of this committee shall be independent director. So the chairperson has to be independent director. Okay. Quorum for meeting of remuneration and nomination committee shall be either 2 members or 1/3 of the members of the committee, whichever is greater. So 2 or 1/3, whichever is greater, including at least one independent director. So that means in quorum, at least one independent director should be there. Yeah. And this committee should meet at least once a year. Means one meeting has to be there at least annually. Now let's understand the role of this committee. So what is the role of this committee? Formulation of the criteria for determining qualifications, positive attributes, independence of a director. So these are not the qualifications which we discuss in terms of the audit report. No, we are now talking about the qualifications in respect of the directors. Recommend to the board of directors a policy related to remuneration of the directors, KMPs and other employees. So this is something which will be done by this committee. Formulation of criteria for evaluation of performance of independent directors and the board of directors. Devising a policy on board diversity. Yeah. Identifying persons who are qualified to become directors and who may be appointed in senior management as per the prescribed criteria. Whether to extend or continue the term of appointment of independent directors on the basis of his performance evaluation. Now this is again an important area. And who is doing this? Nomination and Remuneration Committee. So basically you can say it's a sort of HR function. Can we say that? It's a kind of HR function which they have been playing. But please understand that they are not the HR department. I'm just trying to relate to that so that you can get some understanding around it. But please do not understand this to be an HR function completely. Yeah. Recommend to the board all remuneration payable to senior management. Chairperson of this Nomination and Remuneration Committee may be present at the AGM to answer the queries of the shareholder. However, it would be up to the chairperson to decide who shall answer the queries. Means he will answer the queries or somebody else will answer the queries. Okay, clear on this? Now these are all small things which you can just try to understand. Now in relation to some of these points, you may be thinking, sir, there are so many committees, there are so many provisions. So is it that all of these things are required to be learned? See, in this case, I would only suggest you one point. Try to understand about the roles and responsibilities of these committees, or try to understand the requirements of all of these provisions. Conceptually, for example, you should know what is vigil mechanism. In general, you should know what is this Nomination and Remuneration Committee. Now, once you understand that conceptually, once you understand the requirements, on that basis, you can then look into some specific requirements. For example, what will be the number of board of directors? Sorry, what will be the count of directors in the board of directors? How many of them will be independent? How many of them will be executive? Yeah, all of these things are very, very peculiar, specific, which you need to learn. So each and everything thereby will not be required to be learned. So I'll say break it into 2 parts, and that's how you should try to cover it, instead of just looking at it as if this entire thing requires to be learned. Otherwise, that will create a lot of sort of pressure to your mind, which is not really helpful. Fine. Okay, moving further. Stakeholders Relationship Committee. The listed entity shall constitute a stakeholders relationship committee to specifically look into various aspects of interests of shareholders, debenture holders, and other security holders. And the chairperson of this committee shall be non-executive director. At least 3 directors, with at least one being an independent director, shall be the members of the committee. However, in case of a listed company having special right equity shares, at least 2/3 of the committee shall comprise of independent directors. Okay. So let's understand the role of this committee. This committee will be involved in resolving the grievances of the security holders, including complaints relating to transfer or transmission of shares, non-receipt of annual report, non-receipt of declaration of dividend, issue of new or duplicate certificates, general meetings, etc. Review of measures taken for effective exercise of voting rights by shareholders. Review of adherence to the service standards adopted by listed entity in respect of various services being rendered by registrar and share transfer agent. Review of various measures and initiatives taken by listed company for reducing the quantum of unclaimed dividends. So if you look at some of these queries, these are very common in case of a listed company. There's so many grievances of the shareholders which are required to be addressed. So that's why it's very important to have a separate committee who can look into all of these requirements. And what's the role of the auditor? Auditor should ascertain from again the minutes of this committee, minute of the board minutes, whether this committee was constituted or not, whether this committee is having the right mix as required or not, and whether this committee has been executing its roles and responsibilities which are required to be done. Okay, clear on this? Then before we move on to risk management committee, just give me 1 minute. I'll just be back in 1 minute. Be required to be constituted, and as we have been discussing, all of these committees are required to be constituted in case of a listed company. Now who will constitute this committee? Board of directors. Now again, as regards the composition of this committee, majority of the members over here, majority of the members for this committee shall consist of members of board of directors. Okay. Chairperson of this committee shall be a member of board of directors, and senior executives of listed company may be the members of this committee. This committee will also meet at least once a year, means annually 1 meeting is required for sure. Board of directors will define the roles and responsibilities for this committee. Okay, yeah. Moving on to the next provision, that is around schedule or the statement of deviations or variations. You remember this was required to be reported and this was required to be ensured by the auditor. Yeah, you remember this provision we discussed? Yes or no? Okay. Now let's understand what is this statement. the listed company shall submit to the stock exchange following statement every quarter in respect of public issue, right issue, preferential issue which it may have. Okay, so that means this statement will arise when the company will have public issue, right issue or preferential issue. Now what will this statement contain? This will indicate the deviations, if any, in the use of proceeds from the object stated in the offer document or explanatory statement to the notice for the general meeting, indicating categorized variation. Capital expenditure, as to what was the variation. Sales, what was the variation. Working capital, what was the variation. Okay, all of these things are required to be reported therein. Statement shall be continued to be given till such time the issue proceeds have been fully utilized or the purpose for which those proceeds were raised has been achieved. Where an entity has raised funds through preferential allotment or qualified institutional placement, listed entity shall disclose every year utilization of such funds during that year in its annual report. And this audit committee, you remember the audit committee? The audit committee shall mandatorily review this quarterly statement of deviations. Annual statement of funds utilized for purposes other than those stated in the offer document. Means one, of course, which is a deviation, and if there was a deviation, where are those funds utilized? So that annual statement of funds is also reviewed by the audit committee. Okay, clear on this? Moving further, and this is the regulation around the information to the shareholders. In case of appointment of a new director or reappointment of a director, the shareholders must be provided with following information. Let's see what's the information. Brief resume of the director, nature of his expertise in the functional areas, disclosure of relationship, that means the director's interests, names of listed entities in which the person also holds directorship, and membership of the committee of the board and shareholding of non-executive directors, if any. Okay. The auditor, let's understand the requirements on the part of the auditor. The auditor should ascertain from the communication sent whether in the case of appointment of new director or reappointment, shareholders have been provided with the required information or not. And how will he get to know about it? Again, the communications that would have been made to the shareholders, he can review that document. Through the minutes, etc. also he'll get to know about all of these things. All right, clear on this? Transfer or transmission or transposition of securities. So let's understand what is this regulation, what is this provision. Board of directors of a listed company shall delegate this power of transfer of securities to a committee or to the compliance officer or to the registrar to an issue and or share transfer agents. However, the board of directors and or the delegated authority shall attend to the formalities pertaining to transfer of securities at least once in a fortnight. Delegated authority shall report on transfer of securities to the board of directors in each meeting. Now in this case, what is it that the auditor is required to do? Again, auditor is required to ensure that all of these things were done or not. So everywhere, now you must have understood the perspective that what is it that the auditor is required to do. All of these provisions we have been discussing because auditor needs to ensure compliance of those. And in most of the cases, you'll understand that through the minutes of the meetings of that committee or the board minutes or the audit committee minutes, to most of the through these documents, majorly auditor will be able to ensure about all of these compliances. All right, yeah. Let's move on to another requirement, that is about compliance certificate. This is another very important document which actually flows from the management. So we can say in a way it flows from the management to the board. And this is also something which forms part of the annual report. Let's understand what is this. CEO and the CFO shall certify to the board of directors that they have reviewed the financial statements, cash flow statement for the year, and to the best of their knowledge and belief, they do not contain any material untrue statement or omit any material fact or contain statements that might be misleading. They present true and fair view of listed entities' affairs and are in compliance with existing accounting standards. And you may be wondering, sir, this is something which was required to be done by the auditor. Then how come this is done by the CEO or the CFO? These are the added responsibilities on the part of the management to report internally. So in a way, they are reporting this internally, isn't it? Auditor is doing whatever he was required to do, but internally, it's a mechanism that has been set up. Okay. There are, to the best of their knowledge and belief, no transactions entered into which are fraudulent, illegal, or violative. Okay. Third, they accept responsibility for establishing and maintaining internal controls for financial reporting, and that they have evaluated effectiveness of internal control systems. So first of all, they will accept the responsibility for establishing and maintaining internal controls. So the overall responsibility for this lies with whom? Board of Directors. Board of Directors have also a system, a mechanism through which they will ensure this responsibility is fulfilled on their part. So that's why CEO and CFO will now be confirming the board that they have been establishing this, they have been fulfilling this responsibility, and they have also evaluated the effectiveness of internal control systems. Okay. Plus, they have indicated to the auditors and to the audit committee if there are any significant changes in internal control, significant changes in accounting policies, instances of significant fraud. So all of these things will be confirmed by them to the board of directors. Okay. Then the part B of this schedule 2 clearly brings out that responsibility entrusted to these two persons, CEO and CFO, in relation to establishing and maintaining internal controls over financial reporting. Now, in relation to the internal controls, what should the auditor ensure? I think we already know about this. Yeah, we already know about this, that auditor will have a complete process. Auditor will again have a complete audit program in relation to audit of the internal controls. Yes or no? Yeah. But in the context of some of these provisions that we have been discussing, auditor will also need to ensure, and auditor can also go through some of these documents which will be flowing from the CEO, CFO to the board. They can have access to all of these informations. They can have discussions with the management around all of these, because that will also give him the insights around some of these things which may be happening within the organization. Okay. Clear on this? Yeah. Okay, so then I think I have a query from Gugi. Gugi is saying circulation of annual report consisting of director's description, interest, etc. to all shareholders, whether that should be the sufficient information to in this respect. See, that should be the sufficient information, of course, and until unless there are any specific requirements to make separate communications, those are not really considered. Moving on to the next requirement or the next topic in this context is about the MD&A, management discussion and analysis. As we have already discussed that it's a part of the director's report. Okay, now let's understand what is this MD&A. What does it include? Industry structure and developments. So in relation to the company as to how it stands vis-a-vis the industry. What are the developments in the industry and how those are impacting the company, or how the company plans to have plans to take care of the developments, or plans to sort of grow with the developments which are happening in the industry. So these discussions are done. Opportunities and threats to the company, segment wise or product wise performance, depending on the nature of the business of the company. Management outlook towards the company. If there are any risks, if there are any concerns which may have an impact on the company. Internal control systems and their adequacy. Discussion on financial performance with respect to operational performance. Material developments in human resources or industrial relationships fund, including number of people employed. Details of significant changes. What are those significant changes? Change of 25% or more as compared to last year in the key financial ratios. What are the key financial ratios? Debtors turnover, inventory turnover, interest coverage ratio, current ratio, debt equity ratio, net profit margin ratio. All of these are key performance ratios. Details of any changes in return on net worth as compared to immediately previous financial year, along with detailed explanation. So these are the things that you get to see in this section or in this discussion of the management or the company, which is called as MD&A, management discussion and analysis. So it's a detailed section which you can see in the annual report. And I would also suggest you one thing, that after this chapter, okay, after this session, just try to pull out the annual report of any company. And don't get into a very large size company. Pick up any medium sized company also. And just try to look at some of these sections. Just flip through that. Because annual report you'll see running into generally 100 pages, 200 pages, at times 500 pages. So I do not want you to just go through the complete annual report. No. Just flip through the annual report. Just have a sight of these sections or these things that we have been discussing as to how those are reported in the annual report. See, what is the benefit if you do that? We all know that something that is visible, okay, visual impact is something which stays in our mind, or when we cite something, that stays in our mind for a longer period of time. By getting into this understanding of the various provisions of audit committee or all of these requirements that we have been discussing, if we reading as to how this has actually been drafted in the context of in any company that you see, you will be able to get better insights. Your understanding will improve, and also you will be able to memorize that for a longer period of time. That will really help you. So if you have time, I would suggest spend a couple of hours, or maybe spend 2 to 3 hours on this. It will not take more than that, and don't spend too much time on this. That is not required. That will be more than enough for you to improve your understanding. Some of the terms today you may not have understood. Some of the points today you may not have understood. The moment you will look at the annual report, you will get more clarity. Okay? Yeah. That will really be helpful in terms of developing an understanding. Okay? Let's move further on to some other disclosures. What are those other disclosures? Information shall be prepared and disclosed in accordance with prescribed standards of accounting, financial and non-financial disclosures. Yeah. Channels for disseminating information should provide for equal, timely, and cost-effective information. Minutes of the meeting shall be maintained explicitly, recording dissenting opinions, if any. Related parties disclosures, considered to be a very, very important disclosure, on which we discuss. This is quite, yeah. The listed company shall submit a quarterly compliance report on the corporate governance in the format as may be prescribed. Details of all material transactions with the related parties shall be disclosed therein. The report shall be signed either by the compliance officer or by the CEO of the company. Company shall disclose policy on dealing with related party transactions. And where will this be disclosed? Website, web link thereto in the annual report. Company shall also disclose transactions with any person or entity belonging to promoter group which holds 10% or more shareholding in the listed entity. Okay. It shall be required to submit within 30 days from the date of publication of its standalone and consolidated financial results, disclosures of related party transaction on a consolidated basis. Okay. Yeah. Many a times what is also done is that the entity may require auditor or maybe some other person to certify all of these related party transactions. Because these disclosures are not only forming part of the financial statements, they are also required to be reported separately. Can you see that? Yeah. And that's why it's very, very important for the management to carefully evaluate each and every requirement in respect of this type of disclosure. Okay. Disclosure of accounting treatment, where in the preparation of financial statements, a treatment different from what the accounting standard prescribes. So there is a treatment different from what AS requires. AS means accounting standard. The fact should be disclosed about that in the financial statements together with management's explanation as to why it believes such thing has been done and how it will lead to true and fair view of the financial statements. Okay. In this regard, auditor should refer to provisions of the Companies Act. Also, he should refer to the compliance certificate. You remember we discussed compliance certificate which is issued. In that context, auditor should understand as to how that compliance certificate was issued. Because in the compliance certificate, they would have said that they have ensured compliance with the applicable financial reporting framework, means the accounting standards. And if there is a deviation from the accounting standard, what has been covered in that compliance certificate? Are those contradictory statements? This is one of the checks he will do. All right. Disclosures in relation to sexual harassment of women at workplace. So this is a specific law. So this is a specific provision. Amongst other matters, following should be disclosed in the section on corporate governance of the annual report. If there were any complaints, the number of complaints filed during the financial year, number of complaints disposed of during the financial year. So one is filed, how many were disposed of, and number of complaints which are pending, so that the understanding about this entire system around this process can be understood. Are there any complaints which are still outstanding? Ideally, those should have been disposed of immediately. Yes or no? Next is about the report on corporate governance. The listed company shall submit a quarterly compliance report on corporate governance as specified by the board within 15 days from the close of the quarter. And this report shall be signed either by the compliance officer or CEO of the company. Auditors should ascertain whether the board of directors have included in the annual report a section on corporate governance with a detailed compliance report on corporate governance. So this is something which auditors should ensure, whether this has been done or not, whether this has been included in the annual report or not. Any data in the report on corporate governance should not be inconsistent with what is contained in the financial statements. Obviously, yeah. This is all other information for the auditor, but all of this other information should be in consistency with the information given in the financial statements. Clear? Then comes the auditor's certificate. This is not the auditor's report. Please understand, this is not the auditor's report. This is auditor's certificate. So let's see, what is this auditor's certificate? Where is this required? Yeah. As per Schedules 5, a compliance certificate from either the auditor, or practicing company secretary shall be obtained regarding compliance of conditions of corporate governance. So what will they certify? Whether the conditions of corporate governance were fulfilled, whether those were complied with or not by the management. And this certificate, whether obtained from the auditor or from the practicing company secretary, should be annexed to the director's report, and this director's report will form part of the annual report. So in a way, this will also go to the annual report. Okay. Adverse or qualified statement. Depending upon the facts and circumstances, some situations may require adverse or qualified statement or a disclosure without necessarily making it a subject matter of qualification in the auditor's certificate in respect of compliance of requirements of corporate governance. For example, number of non-executive directors is less than 50% of the strength of board of directors. Qualified and independent audit committee is not set up. These are some of the examples you may get to see. Chairman of the audit committee is not an independent director. He was required to be an independent director. Audit committee did not meet 4 times a year. Okay. Yeah. So these are some of the things which you will get to see in the statement. Similarly, there could be various other points. Yeah. All of you clear on this? Okay. Moving further. We can look at some of the statements which will appear in the auditor's certificate as regards the compliance of conditions of corporate governance. Yeah. ABC Oil and Natural Gas Commission. Let's see what's the statement. Non-compliance with appointment of minimum number of independent directors. Filling up the vacancies caused due to resignation or retirement of independent directors within the specified time period, and appointment of women director to board within the specified time period. So something which will get to C being reported. XYZ Bank. Non-compliance with regard to appointment of women director to the board for the financial year. So 15-16 or whichever financial year is that. Another company, PQR Electrification Corporation Limited. Non-compliance in respect of appointment of woman director to the board. Another company, RKP National Fertilizers Limited. Non-compliance in respect of minimum number of independent directors in the composition of board, and appointment of women director, and performance evaluation of the independent directors by the board of directors, and performance evaluation by the independent directors of non-independent directors, that of the board as a whole and that of the chairperson of the company. So this is how you see these things getting reported. Okay, yeah. Now we can look at the pro forma of the certificate to be issued by the auditors regarding compliance of conditions of corporate governance. So this auditor's certificate which will go, and as we have discussed, that this is not necessarily required to be given by the auditor. It may also go from practicing company secretary. So let's see what's the pro forma, what all things are required to be covered. So it's illustrative. So it will be addressed to the members, wherein the auditor will say, in case it's issued by the auditor, we have examined the compliance of conditions of corporate governance by the company, whatever is the name of the company, for the year ended as stipulated by the regulations. Means whatever the regulations require. Compliance of conditions is the responsibility of the management. So whose responsibility is this? Management. Again, he will bring out the management's responsibility. Then he will talk about his responsibility. He will say, our examination was limited to procedures and implementation thereof. Means whether the management has implemented that or not, adopted by the company for ensuring compliance of conditions of corporate governance. Then he'll say, we are not conducting an audit. It's neither an audit nor an expression of opinion. So that is already done. He'll say, this is not about financial statements audit. So I'm not expressing any separate opinion on this, or say separately, I'm not talking about opinion on the financial statements over here. No. He'll clarify this point, that I'm not doing this. Then he'll say, in our opinion, and to the best of our information and according to the explanations given to us, we certify. Okay, now he's certifying that the company has complied with conditions of corporate governance as stipulated in the above mentioned regulations. What are the above mentioned regulations which we have discussed? Or in case the company has not complied with the conditions of corporate governance, in case the company has not complied with the conditions of corporate governance, therein he'll say, in our opinion. So this is a case wherein everything was fine. In case things are not fine, then he'll say, in our opinion and to the best of our information and according to the explanations given to us, subject to the following. Means subject to these points which he'll report. we certify that company has complied with conditions of corporate governance. Now you remember subject to something, or this language was similar to what we saw in case of a qualified report, not in the adverse report, qualified report. So herein he'll say everything is fine except for these things which I have noted down in point number 1 or 2. Okay, yeah. Then he'll say we state that such compliance is neither an assurance as to the future viability of the company nor the efficiency or effectiveness with which the management has conducted the affairs of the company. And of course, then the sign off will happen by the auditor. Yeah, clear on this? So at every point of time, you will see that whenever any certification or whenever any sort of report will flow from auditor to the members, to the board of directors, or maybe to anybody, first of all, he will bring out as to what he has done. Then he will tell clearly about the responsibilities. What was the responsibility of other person, means the management, what was his responsibility. And then he will come to his conclusion or his opinion or his certification, whatever be the case. Okay, yeah, clear on this? So with this, what we have done is we have discussed about various requirements in relation to listed companies, various regulations in respect to listed companies. In relation to listed companies, there are n number of regulations. That's why whenever you will be involved as an auditor of listed company, you will have to be very, very thorough in terms of these regulations, which doesn't require that you should be, remembering each and everything. No, but it's very, very important that you should be able to track each and every applicable provision to the entity, which can be best done by having discussions with the secretarial or the legal department of the company, and if required, by also having discussions with the auditor's expert, as the case may be. Yeah. Now we'll continue our discussion with some more regulations, which are also sort of an update and which are considered to be important. Okay. As per the SEBI circular on resignation of statutory auditors from the listed entities and their material subsidiaries. So it's about the resignation of the auditors. In case the auditor resigns from the listed company and material subsidiaries of the listed company. So what is it that is required to be done? Listed companies are required to make timely disclosures to the investors for enabling them to take informed investment decisions. So first is timely disclosure to the investors about this resignation. Okay. Audit committee of a listed company has to make recommendations for appointment, remuneration, terms of appointment of the auditors. They are also responsible for reviewing and monitoring independence and performance of auditors. Yeah. Detailed reasons need to be disclosed by the listed entities to the stock exchanges in case there is a resignation of the auditor. And this explanation should go as soon as possible, but it should not be later than 24 hours of receipt of such reasons from the auditor. Okay, yeah. So 1 day is given. Once you receive it from the auditor, then you give it to the stock exchange. Next, certain disclosures to be made part of notice of the shareholders where the statutory auditors are proposed to be appointed, including their terms of appointment. Resignation of auditor of a listed company, its material subsidiary, before the completion of audit of financial results for the year due to reasons. So let's suppose auditor resigns, and what is the reason he is giving? I'm preoccupied. This is not acceptable. It shows that there is some problem. Maybe the auditor just wants to move out, but he's not giving the proper reason. So this may hamper seriously the investor confidence. Deny them access to reliable information for taking timely investment decisions. Yeah. In the light of the above, now because of all of these situations which may happen, conditions to be complied with upon resignation of statutory auditor of a listed company or its material subsidiary with respect to limited review. Limited review is required to be conducted for every quarter or audit report as per the SEBI regulations are as under. Now let's understand what are the conditions which are required to be complied with. Now these are important one. These are important one. And in the last financial year, in the last couple of years, you would have seen that such of these instances increased significantly, and that's why it was very, very important to bring in regulations around this. Let's understand what are those conditions which are mandatorily required to be complied. All listed entities and their material subsidiaries shall ensure compliance with following conditions while appointing or reappointing an auditor. While appointing or reappointing an auditor. First, if the auditor resigns within 45 days from the end of the quarter of a financial year, then auditor shall before such resignation issue his report, whatever be the report, limited review report, or so that means he should complete his audit, issue the report, and then he should move on. Before that, he cannot resign. If the auditor resigns after 45 days, why this 45 days has been specified? Because this is the time period for a company to publish its results. So by then audit is completed, limited review is completed. So if he is resigning after 45 days, then the auditor shall before his resignation issue the report. At times there could be a delay in publishing the results. So if that is happening after 45 days, even then auditor should complete it and then go. Notwithstanding the above, means above 1 or 2, auditor, if the auditor has signed the audit report or the limited review report for the first 3 quarters of the financial year, then the auditor shall before such resignation issue the limited review or audit report for the last quarter of such financial year as well as audit report for such financial year. So that means if the auditor has audited 3 quarters, then the 4th quarter has to be audited by him. If he has reviewed first 3 quarters, 4th quarter has to be reviewed by him, full year has to be reviewed by him. Okay, yeah. Other conditions related to his resignation. Reporting of concerns with respect to listed entity or its material subsidiary to the audit committee. In case of any concern with the management of the listed entity or material subsidiary, such as non-availability of information, non-cooperation by the management, which may hamper the audit process, the auditor shall approach chairman of audit committee, and audit committee shall review such concern, and immediately without specifically waiting for the quarterly audit meeting. So audit committee will not say that, okay, let's meet in the audit committee meeting, which we do quarterly. No, this will have to be addressed by the chairperson or the audit committee immediately, because it's a big concern. In case the auditor proposes to resign, all of his concerns, means why is he thinking about resignation, is something which will have to be understood along with the relevant documents by the audit committee. In case proposed resignation is due to non-receipt of information, so auditor is saying I am not receiving the information, the details that I required for audit, I am not able to get it. In such a case, audit committee shall seek such details or information from the management as to why they have not been providing it. On receipt of such information from the auditor regarding to proposal to resign as mentioned above, audit committee or the board of directors, as the case may be, shall deliberate on the matter and communicate its views to the management and the auditor. So they will get into discussions, they will deliberate as to what is the need. Is there any way through which this resignation can be avoided? Because resignation is not considered to be a nice thing. It's considered to be a bad thing actually. Disclaimer in case of non-receipt of information. That is, in case listed entity or its material subsidiary does not provide information which is required by the auditor, to the extent that auditor is now looking at disclaimer in the audit report. Okay. In this case, listed entity or the material subsidiary shall ensure that the conditions which are specified in 6A and 6B are included. What is 6A? All of these points that we have discussed so far, they were all 6A, and these points, all of them were 6B. Now, these companies, that means listed company, their material subsidiary, they will ensure that all of these conditions are included in the terms of appointment of the statutory auditor. When they will appoint them, will include all of these points over there. In case the auditor has already been appointed, terms of reappointment shall be suitably modified. The terms of appointment should have this specific clauses so that clear agreement is there between two parties with understanding of all of these clauses. Yeah. Practicing company secretary shall certify compliance by a listed company in relation to these two provisions, 6A and 6B, in the annual secretarial compliance report. Okay, yeah. Obligations of the listed entity and their material subsidiaries. Let's understand what are their obligations. Yeah, let's understand what are their obligations. Just give me 1 minute. Format of information to be obtained from the statutory auditor upon resignation. So there is a specified format now. Upon resignation, listed company and material subsidiary shall obtain information from the auditor in the prescribed format, and listed company shall ensure disclosure of the same under the SEBI regulations. Cooperation by the listed company and its material subsidiary. During the period from when auditor proposes to resign till the time auditor submits report for such quarter or the financial year, listed company and the material subsidiary, or as the case may be, they will continue to provide all the required information to the auditor for his audit. So they will not say that now you are proposing to resign and you have to go, so we'll stop providing the information. No. So till the time he is not going, till the time he has not completed his audit, till the time he has not issued his report, all the information that he'll require has to be provided by the company. Upon resignation of the auditor, basically these are the headers which you can just mark for your purposes. Upon resignation of the auditor, audit committee shall deliberate upon all the concerns raised by the auditor with respect to its resignation as soon as possible, but not later than day of next audit committee meeting, and communicate its views to the management. Listed entity shall ensure disclosure of audit committee's views to the stock exchange as soon as possible, but not later than 24 hours after the date of such audit committee meeting. So this disclosure is also required to be given to the stock exchange and in a timely manner. Correct? Yeah. In case an entity is not mandated to have an audit committee, then the board of directors of such entity shall ensure compliance of this And you may be thinking, sir, how is it possible? Because every listed company will have an audit committee. So if you remember that these provisions are not only applicable to listed company, but to their material subsidiaries also. And those material subsidiaries may not have a requirement of audit committee. So in that context, this provision is saying that in case audit committee is not there, board of directors will ensure this compliance, or whatever is required on the part of audit committee, that will be done by the board of directors for such type of entities. Okay. Stock exchanges are advised to bring the provisions of this circular to the notice of all the listed entities and their material subsidiaries, and also disseminate it on their websites. So when this provision will come, it's important that all of the entities understand this, and they need to put this on their website, because once they will have this provision, they will put this on their website. In case an auditor is rendered disqualified, let's suppose in case an auditor is not qualified. You remember the provisions of the Companies Act which suggest as to when an auditor will be qualified to become an auditor or disqualified to be an auditor. So in case an auditor is rendered disqualified, why? As per section 141, then the provisions of this circular will not apply. See, the idea of this circular is what? To protect the interests of the investor, wherein something wrong may be going in the company and which the auditor is unable to control, and that's why he's just trying to move out. But in a situation wherein the auditor himself is disqualified, then it's not about following this provision. Okay. This circular is issued in exercise of the powers of SEBI and shall be in addition to the provisions of the Companies Act. Of course, as we have been discussing, that all of these provisions that we have discussed so far are in addition to some of the provisions which exist under the Companies Act in relation to all of these companies. Okay. Yeah. Clear on this aspect? So with this, we are done with our discussion in relation to the regulations applicable to various listed companies. So if I have to just quickly summarize, let's try to understand. See, we discussed about the listed companies. In relation to the listed companies, first of all, we discussed about the regulations which are coming in from SEBI. But other than that, we also understand that there were various legal requirements which the companies were anyways required to follow as per the Companies Act. So what do? Do we follow Companies Act or do we follow SEBI regulations? So we said that we need to follow both. We are not going to run away from the Companies Act, or we are not required not to follow the Companies Act in case we follow the regulations. And anyways, in both the cases, there will not be a disconnect. Generally, there could be a duplication, which is fine because both the acts require one provision to be followed, which is fine. Yeah. Then we discussed about various committees, and some of these committees which are really considered to be important are audit committee, because they will have multiple functions in relation to financial reporting framework, internal control system setup, in relation to the compliance of the laws and regulations. And that's why it's very, very important for this committee to play an important role in terms of compliance of all of these things, for which auditor can also assist. But the auditor's assistance should not be in the nature of management function. It should be limited to his role as an auditor. Yeah. Then we also discussed about various other committees, and each and every committee has a role to play. Everywhere, whenever we have had a discussion, at multiple places you would have seen that in this committee, this should be the number of the members, this should be the count of the directors, these many persons should be independent directors, these many persons should be non-executive directors. So I would say this was the area on which you need to learn the numbers. Other than that, I would again suggest all of you not to get into mugging up the things. try to understand the concept. Yeah. And then there was an update that we discussed that was in the context of resignation of the auditors, which is because of non-cooperation of the management, certain observations which the management is not able to address. So that's why, to protect that scenario, to protect the interests of the investors and to also help the auditors, this new provision has been inserted, which is considered important. So you should mark that as important. All right. Yeah. So with this, I would just once again request all of you to just go through any annual report, spend some time on that to have better clarity around it. Yeah. And with this, we can also conclude our discussion for the day. We have covered this chapter, and in the next session, we'll start with a new topic. And in case you have any queries, you can just feel free to send your queries, and we'll come back to your queries in the next session. Okay. Thanks to all of you once again for your time and for your wonderful participation. Thanks so much.